All right. We're back at it again. I've got someone really special in the house today. He's a busy man, but he literally wears several caps. I've got the amazing Dr. Mayo Tosin in the house. I'll give you a little background, and I'm sure I might not be able to do justice fully to his portfolio. So, Dr. Mayo Tosin is a medical doctor. Yes, the doctor there is not just like for Dr. Dre. He's a medical doctor, he's a GP, but that's not what we know him for. He's known as Mayo the Builder because of his vast experience with actually building properties, building buildings. He started his property as a property investor. Most of us in the UK who have known him for a few years, we knew several years ago he started being a property investor. I'll say 2017 or even a bit earlier. But what most people don't realize is that before 2017, he had even started dabbling into property at a very young age even as a teenager, he started buying land. So I brought Dr. Mayo on board today so we can have a chat, just as we do on Moneywise Doctor. We identify doctors who are money wise, who are taking big financial strides, sort of to share their ideas, to share their experience with us, and of course, see what we can learn from them and how we can connect with them. You're welcome, Dr. Mayo.
Thank you very much for having me. It's a pleasure, Pete, today.
Lovely. I mean, before we started recording, I was commenting on your fresh new haircut and saying that looks nice. Yeah, but of course, we're not here to talk about your head. You're talking about your brain, that big brain. So, quick question. Why property? You are a doctor, you're a fully qualified, actually, you're a member of Royal College of GP, but it's obvious that you've got other hats. Why have you decided to delve into property per se?
Okay. Well, I think initially, when I came into England, you hear that people work very hard, but a lot of their incomes get eroded by tax. And I started
Mm,
asking a lot of questions. The
mm.
how, the why, how can I work smart rather than work too hard? And it became very obvious that the business um, 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 industry was where there was room for people to be tax savvy, um,
Mm.
and which was legally done. And I started asking questions, and so because I've always had a business background, and I was like, okay, fine. What is the safe place to be? What is the questions I used to ask myself was what is sustainable? What is it that I am doing that I can find myself doing in the next 20, 30 years? And I started digging and asking questions. And at the time, a popular renovation program on TV used to come up, Homes Under the Hammer, and it was the show was for entertainment, but you hear people make money, lose money, and that got me interested. And I started digging and finding out more, and that was how found myself here today.
Wow, that's amazing. So we just watched Homes Under the Hammer for entertainment, but while you were watching it, you were thinking, I can do that. Why can't I do that? I
Absolutely.
like how you're thinking about it from sustainable. You're not just thinking of something you can do now and make a quick buck. Because we've had a few conversations and you tend to have that long-term, sustainable. We're not just looking to make a quick buck. All right. But basically, it couldn't have been that easy. I'm aware that you've obviously moved to the UK. I think you weren't born in the UK. You moved to the UK.
No.
Your accent doesn't suggest that you weren't born in the UK. You sound like you were born in the UK, not like me. Right. So you moved to the UK probably 7 years ago, 8 years ago,
So
thereabout.
yes.
Yeah. So I don't imagine, from my experience, I don't imagine it could have been just an easy ride starting because you've got a huge. We've seen doctors who do businesses, we've seen doctors who invest in property, but it's rare to see a doctor who's actually in the midst of property development, raising finance. So could you give us a little bit about your early start in the UK, how you started, and sort of like the challenges you met and how you overcame them?
Okay, yeah. So I did mention that I used to watch Homes Under the Hammer, and there was a chap called Martins. I think he's the major presenter of the program. And
Mhm.
I can't remember. Randomly, I was looking at the newspaper. I saw an advert for one of the property academies who would train you to be property investors. And I said to my wife, "Well, we don't lose anything. Let's take the leap." Went out there. It was in London. I remember the day. I have pictures of the day. It was because for me, those were life changing day events in our lives. And I went out there, and of course, it was free, and then free became £1,000, and £1,000 came, you have to pay more. And but something was quite remarkable, and I said to my wife that whatever it is that we are going to learn in this place, right? We do not have to. I said it very clearly to my wife. We do not have to. We're already blessed in the fact that we
Mm.
already were trained already. We had degrees,
Yes.
and we knew. I
Yes.
said to my wife that very clearly, if we stay on this path, we will not lack money, right? But if
No.
we wanted to actually be dynamic and different, then if we go
Hmm.
on this path, it will change the course of our lives forever. And I said to her,
Absolutely.
and what we then did was that it was very obvious very quickly that all the people around us were going to give and pass on their own knowledge, but with their own knowledge came their fears, came their
Okay.
anxiety, came their shortcomings,
Mm.
and their own limitations. And so I said to myself, if I wanted to do something unique or different outside of what is being done or achieved, I had
Yeah.
to change the people around me. I had to
Yes.
intentionally create a different environment. And so at the time, my environment was simple. It was we go home, it was family. From family, it was go to work where everybody talks about blood tests and talks about investigation and talks about, and that's your life from, from about 9 to 5. And then if you, I mean, I go attend church, and people in church, we talk about the things of church, and nobody was talking about money. Nobody was talking
No.
about safe, wise things to do with your money. So I,
Yeah.
I felt I felt okay, fine. I needed to be in a place where people were intentionally talking about money, and doing different things, and that was the game changer for us. So we opted to go into having more education, but
Okay.
more education came with a new network.
Lovely. Yep.
So it came with people who ordinarily would have never, ever, ever, ever got.
Never. People that wouldn't be in your network
No,
usually.
exactly. So it was an
Yeah.
intentional act of being in a different environment with a central goal. It was property that was attracting all of us, and everybody was having different experiences, but bringing their different experiences to the table to say, these were my individual experiences, these were my failures, these were my successes. And it was that point
Mm.
we were able to unify it. So so we so it was that was the only place we were talking about it. So I'm talking 7 8 years ago. So today
Yeah.
now it's a bit easy. I mean, there's a lot of information out there today because of social media and all that. But back seven
Yeah.
years ago, things like bridge lenders, things like specialist finance, those things were
Yeah.
not mainstream conversations. Things like yeah, I mean, people will talk about mortgages very easily, but there were lots of things that were not mainstream information that we had to find out, but we could only do that by being in the right circle.
Right. Wow. That's amazing. I mean, some of the things you've mentioned that 7, 8 years ago they weren't mainstream. I can say that for maybe some of my viewers might know what you're talking about. But I'm sure there are a lot of people, doctors, who don't. What's he talking about? Bridge finance and all that. Yeah, but that's sort of the rabbit hole going down. Is your bread and butter now. Just to give a bit of an insight. Basically, what you did, you came in, you weren't satisfied with just doing the 9 to 5 thing, just going about it, do the regular stuff, go to church, go to work. You wanted to change your sort of like trajectory.
Yeah,
So you took a very big step. You don't live in London. I'm aware you traveled to London
yeah, yeah,
with
yes.
your wife, and then you went into this free property seminar, of which some people say is a scam. But what that did for you, it wasn't just the education, because you can read the education anywhere on the internet or wherever. But you also were in a new environment where you got connected, the network actually, that now took you to doing big deals. You're doing properties, you're doing conversions. That is amazing. That leads me to my next question. Could you give us just a general overview of the type of deals you do? Because when I say property entrepreneur, maybe a million people raise their hands, and they might think that I'm just talking about buying another house and, sort of like buying a buy to let, move out to your house. Just give us a brief general idea of maybe your recent deals or the type of deals you've done in the past.
So I'm a bit adventurous. That has sometimes put me into big problems. But I think virtually,
It's part of the journey.
yeah, virtually we've done virtually every, well, almost every strategy out there. So we've
Hmm.
done simple houses, we've done flats, convert house flat conversions, 1 bed to 2 beds. I've done HMO conversions, I've done commercial, I've done new builds, I've done service accommodation, I've done your rent to rent HMOs, I've done your rent to rent service accommodation. I've done it all. Right. So it's yeah. So we do. I mean. So basically, I walk in anywhere, I see a deal, and my question to
Yes.
myself is, what is this used for? What is the best case used for this particular house or deal? So I've done everything else. So we do simple buy to let's, service accommodation, HMOs, commercial conversions, new build, from ground up, big developments. So the whole extreme.
Range.
Yeah.
Excellent. So you sort of like if you see an opportunity, once it's an area you're comfortable with, you're going for it, you understand it. Different from me, so I'm very much from a stock market background. Property is just a bit of dibble dabble, but for you, you're very much into property. And one time you said to me, if everything goes down, the value cannot go to zero. Because in stock markets, you can get 100x. We've had investment that made 100x. And then there are things that could actually go to zero. We've been fortunate not to be there, but it's very, very possible. And you said it's rarely it can it go to zero. And worst case scenario, we'll move into there. I think you
Yeah,
said
yeah,
that to me. We'll move into there.
absolutely, absolutely. And I very often, I mean, people always make reference to the 2008 crash, and it's
Yes.
interesting that when you look at the data, values actually dropped just by 20%, actually,
Yes.
and it dropped 20% over a span of about 18 months. So it didn't go from boom, it gradually dropped for over close to 2 years, and it dropped by 20%. The interesting part about it is that, but almost all the properties that dropped 20% in 2008, by 2010 they were all back to baseline.
Mm. So that goes to say time in the market is much better than timing the market. This is true for any investment. If you're
Absolutely,
trying to time the market, you're probably going to miss it. So
absolutely.
previously, as a younger person, I used to, when I was in my early 20s, we do all these strategies, evaluate companies and all that. But now when people come and say, maybe you should buy an index fund, I'm not sure you want to stay up all night listening to investors call. But that's amazing. That's really quite insightful because people always refer to that 2008, and remember, most people forget 2008, a lot of unsophisticated investors,
Yes,
people who just jump in. They
yeah,
didn't go to get an education like you. They didn't do trial and error. They
yeah.
just jump in and start thinking, oh, I'm a property investor. I've got property here and there. I'll borrow money on 0%
It
returns.
was no.
Right.
If we go back then, I mean, the banks were lending at 0% loan to values.
Yeah.
You
Yeah.
basically your job. I mean, I know somebody who practically he bought a house. He didn't know, with no deposits really
Mm.
at the time, and so when there was pressure, the question is, what do I have to lose? Bank, take your house back,
They
and
just filling the house and run.
yeah, and then so you had so much of supply in the market.
Wow. And obviously, simple economics, so much supply, less
Yeah,
demand, just
simple.
crashes.
Yeah, absolutely.
It's very funny. We're talking about 0% now, but I know in July 2000, sorry, July this year, 2023, we did a blog post on our moneywise.com about Skipton. So Skipton
Yes,
decided to sort of like open the box and offer the 0% mortgage, of which people freaked out. They said, "Oh, is this 2008?" And we did an article on it and why we weren't skipping for joy. But what was very different, I found out that there are quite a few differences from the sort of loan Skipton is offering. Um, you obviously are aware of Skipton and
yeah,
their zero
I know,
percent.
I know
Can you sort of highlight us on the differences between that and what happened in 2008?
Well, so at the time, the banks just wanted people to take risk. Again, I think they were moving with the market.
Yeah,
People didn't want to own houses for a lot of challenges at
no,
the time, and that was a bit to encourage people to say that rather than, if you're going to rent, why don't you just pay the money to the banks anyway? And that was the idea behind why there was 0% loan to values at the time, deposits at the time. I think it's a bit
yes,
different this time around because Kipton, they are well protected, absolutely well
yes,
protected. Because when you see the metrics, when you see the criteria for those loans, it's like it's only really a handful of people who could actually meet them. And
Absolutely.
and then of course the location of the house. So there's so many factors put into it. So it's not just a free for all, like
No.
in the past. So it's in fact I still do not know anybody who's met any of those criteria. When I look at it,
That's funny because I haven't met anyone who met the criteria. There are really strict criteria. They have to be renting, share your rental record, but it's very different from 2008. That's fantastic. So basically, that's basically your current deals you're doing. I know you do deals where you get people who are able to invest. I know you do some sort of qualification and all that.
yeah.
Can I say what was the largest deal you've done so far? Maybe in terms of the property you're doing, what's the largest deal you've done so far? And feel free to not disclose the numbers if you don't feel comfortable, but just give us the size.
So it's a big site of 20 houses. It's a
Oh,
mix.
okay.
It's a mixture of eight four beds. I've got three housing association there, and I've got I think eight. Um, no, sorry. So eight four beds. Three house.
Eight four beds.
Yes, three of them are then three are housing association, two beds and three beds, and all the rest are three beds houses, a mixture of semis and detached. I think that's the biggest
Wow.
one, yeah, or that we're doing.
Wow.
Um,
That's massive. That's massive.
it's
When you say housing association for the uninitiated in real estate,
Okay, yes.
like
So
some of us.
basically, so when you do any development, I think it's more of a diversity and equality principle.
Yep.
Yeah, from the government to make sure that we do not have all the wealthy people living in one area and middle class all in another area, and people who are not
Okay.
in an area. So the council makes sure that for every development, we give a certain percent of houses to um, less people who cannot afford
For
the
less.
yeah, yes, for less. So that's basically what we did, and it's quite interesting actually because even before we started building, we actually sold the three housing association houses. Um,
Wow.
we sold it for I think 85% loan to value of the value market value. So they do their own Red Book valuation. We do our Red Book valuation.
Okay.
We agree a middle point, and they buy it for 85% loan to value. So the idea is that they give it to people who are not, affluent as people who could buy the big houses, and then implant
Yes.
in society so that the positive influence of everybody can reflect on them also, and then children grow up in a different new environment that they ordinarily couldn't have had. So
That's amazing.
yeah, that's the biggest that we're doing. It's if I say that it's not challenging, that would be a big lie. It is a whole lot challenging. There's so many moving parts. There's so many things. Um it's how do I put it? You're really taking it's like you're taking full responsibility for 20 people for another X number of years. Families.
Wow.
That's basically
I
what it is.
mean, that's huge. I mean, you're not talking 20 individuals, you're talking 20 families, 20 properties.
Yes.
That's a major project by any
It
standards.
it is,
Um,
and in fact, everything that we now say would go wrong, every as simple as painting, it will go wrong, and you would have to
right.
take responsibility to fix it. So yeah, it's
That's a huge project.
yes,
Now that takes me to the next point to take you back a little bit. Imagine maybe 6 years ago, because you started 2017, did you ever imagine that you're going to be at the point where, I mean, obviously you started in property, you attended a seminar, and you were ready to put up the money? Because many people think, oh, why am I going to pay somebody £1,000? I'm going to learn everything, and I'm sure you spent several thousands. I know because we talked about it. But obviously it's paying dividends. You're not one of those property gurus that are just hiding behind the camera. You're out there, we're seeing you with your hard heart. We know your number, we know where you live, and people investing with you, they don't have fears and all that. Could you tell us, did you ever imagine that you're going to be at this point? I mean, you're obviously a medical doctor, but you're doing far bigger deals, 20 properties. That's something you ever thought about?
well, actually, yes. Again, so all this you see did not just appear, and I'll give you just a very just a quick. So when I was in I was in medical school, and I
Yes.
when I went into medical school at the time in the city where I was, there was no
Hmm.
cinema. We didn't have a big shopping mall, and it was in the city of Benin, right? And at
Yes.
the time, there was no big cinema, there was no shopping mall, at the time, and it was I got this idea that actually I can build one. I was in school
Hmm.
and I put pen to paper and I started drawing and I started getting architect.
Wow. As a
And
medical student,
yes, yes, and
that's amazing.
I had this big idea that I wanted to build this big shopping mall, which is cinema. There was none of its own at the time. I knew I was going to have parking challenges, and I was trying to design underground parking. Nothing like this existed at the time anywhere in Benin. Nothing. So, but this was me, medical school, dreaming, taking action. Um, I mean, I didn't get a hand. I didn't get. I mean, yes, I was then looking for investors. I was trying to
Yes.
push for investors. I was hunting for them. I was going to meet people with this idea and all that. So, so, so that has always been there. So I didn't get the investment investors at the time. Okay,
Hmm.
um,
Hmm.
and so I couldn't. I didn't do that. I mean, years
You
later,
didn't
it
execute.
took the town another maybe 7, 10 years to actually then have a shopping mall or even have a cinema.
Hmm.
You know,
Wow.
and in fact, up
Wow.
to date, I don't even think that there's still the idea that we conceptualized at the time. I don't think we have a place that has underground parking. And I don't think it still exists. But that was the idea we had. At least we're talking 10, 15 years ago. And so I've always been that person to think about in that line of
Wow.
construction. And so in my early years in England, I used to always say, we drive through any construction site, and I'll say to my wife, I would build. Um, and I remember it clearly because I didn't used to even say it in English. I used to say it in my local dialect. For the people who would
Yes.
understand it, I'll say, and it was something like this in Yoruba, Emi no ma kole. Now, it meant that,
Sorry, sorry. I'm going to try. Eminem, my colleague.
yes, that me too, I will build. And that's the way I used to, yeah, that's the way I used to say it. So every
Wow.
time I drove past any construction site, I used to say that. Right? So it did not
Wow.
just appear. All right. So it's something that it has had seeds, and I've gradually, for over the years, walked towards it step by time. So it didn't just appear actually.
This is amazing. This is what how is it said? The word became flesh. So
Yes,
you've
absolutely.
already thought about this. You've been talking about it when you're driving around. You're saying, "Me too, I'll build." So basically, it's not something you just woke up and think, "Oh, property is popular." I'm seeing a lot of YouTube influencers doing property. Something you've been thinking about, and that takes me back again. We're sort of flipping back.
Yeah.
I did doing a bit of research for this sort of for this our podcast. I came across where you mentioned that you bought your first property, a landed property at 14 years of age. I'm thinking, well, at 14, most people are thinking, how can I buy a better sneaker? So they're thinking about how, how to spin, toasting lines. And at 14 years, can you tell me what was going through your mind?
No, again, when I think back about that, again, it's one of those things that happen in one's life that when you then reflect back, you wonder how did it actually happen. Now, I was on the bus.
Okay.
I was on the bus. I was on a big luxurious bus. I was going to uni. And the
Yes.
person right beside me was the deputy director of lands in the state.
Oh, wow.
I had no idea, and we gisted for 8, 10 hours. He became my friend, and we just chatted. I came back from school after the holiday. I went to go see him, and we chatted, and that's how we became friends. And I'm like, "Wow, you're deputy director of lands, right? I want a plot of land."
Hmm.
He was like, "Really, you like that?"
Wow.
And I said,
At 14.
"Yeah." And he said that, of course, I didn't have the money. So what I then offered to do at the time was like, well, actually, I could save money and I could pay for it, in installments. He was like, okay, fine, you can help me. He was the director anyway, deputy director, and so he allocated a plot of land, and I was just paying in bits.
Wow. So that's like lease option style.
Absolutely, absolutely. So this was
Wow.
me at the time
Wow.
doing what we now call lease option. So I'd secured the land and I was paying in bits. And it's interesting that in fact at some point, my parents found my what we call my right of occupancy in my
Yes.
room. And
Yes.
what is this document?
Wow.
And I said, well, like my head was like, what are you doing looking through my stuff? Anyway, since you've seen it, it's what it is. It's a right of occupancy document. And my dad was stunned because he was like, people get duped in trying to do this. And my dad took all the paperwork and took it to the directorate to go and confirm that this was legit.
Verify.
Yeah, to verify, and lo and behold, it was. So it was. So when I look back, I didn't set out right from the onset to say, "Hey,"
Mm.
because I couldn't even afford it, and so I was paying in
Yes.
10,000 and 5,000, and until the money became, I think if I remember that I bought it for a total of 150,000 naira at the time, and this was far back as maybe 2000 and
Right.
um,
It's hard to convert now. Don't worry, we don't do public math. But roughly now, a thousand naira will roughly be about a pound now, maybe a bit more. Yeah, so you're talking about maybe 150 pounds or thereabouts
at the time, but I mean the value at the time was a bit different. So,
has changed. Yeah.
but then that I think for me, it's I think over the years, and I keep learning that, I mean, of course, God made us differently. And I always use this scriptural principle, and it's simple
Yeah.
that the principle of the talent. So for some, God gave 10, some others, God
Hmm.
gave 5, for some others, God gave 1. Now, the
Hmm.
important bit there is that the person who God gave 1, all he or she needs to do is come back with 1. And the person who has been given 3, all they need really to do is come back with 3. And the person who has 5, the same, right? There's no point in the person who has 1 trying to work or trying to produce 3. The expectation is if you can achieve it whole, happy days. So what
Hmm.
I always say is that for me, looking back, I feel like God gave me some talents, and my principle is to maximize and to reproduce in the same level that that I've been bestowed, I've been gifted with. So yeah, that's the principle, really.
Amazing. Amazing. I don't think anyone can accuse you of being a small dreamer. I was calling you Mayo the Builder. Now I'm thinking I should add Mayo the Dreamer. But you're not just dreaming. You're dreaming and you're building. You're sort of getting your hands dirty. We're seeing your pictures. You're out there. You're doing stuff and all that. A big question. Obviously, a lot of us doctors who are involved in businesses and different things and invest and have been fortunate to get to that point of financial freedom. Do you still hold your medical license and do you still practice medicine?
Yes, I do. Yes, I do. Yes, I do.
Okay.
Again, I keep saying it, I'm fortunate, and I'm also double fortunate because my wife is also she also
As a
has
doctor.
license. Yes, so yes, I do. And a few things happened to me this year, some personal,
Hmm.
but a lot of it was life changing.
Yeah.
And I still do it, and it is still the baseline, the backup for a lot of things I do. And so I have this conversation regularly because to do what we do, we need funds, and we need funds from the bank and from the investors. And so when I say to my investors is, now I understand that the funds that you were trying to entrust with us is kind of a lot of money, right? But let us put it into
Hmm.
perspective. Okay, now let's assume that all your money goes bust. How long would it take me personally to refund your individual money? This is exactly
Hmm.
how long time it will take. This is assuming that
Hmm.
nothing property works, right? I still
Hmm.
have the ability to actually reproduce and
To
generate
raise money.
income. That's one. Two, I say to people personally, in quote, again, because I feel like I'm blessed, I do not personally need, I do not need construction money to feed.
No. No.
So that's the value that it brings to me. So one is the fact that of course the knowledge is skill, it's there, we're helping lots of people. It will generate work. Again, I need to perform at the level, at the at the level of, I need to reproduce that skill or that gift
That's
at
good.
its own level.
Hmm.
And plus the fact that it gives us credibility both from the banks and our investors, and our ability to raise funds for ourselves. So yes, I still do see patients.
That is fantastic. I'm glad to hear that. I mean, basically, you've listed a couple of advantages, and I think one is basically you're retaining your license. You trained so hard for many years, you became a doctor. I've seen a lot of people who think that once you start making income from a different source, you should just cling your license. And while I think you might be able to cut down on what you do and you're more flexible, you choose when you want to work or not, it didn't seem like the brightest idea, especially if you're doing something like property where the income doesn't just come every day. Some of it is long-term investment and all that. So I've done a bit of research in this and I found doctors like William Bernstein. William Bernstein is like an investment guru. People know him in the US, but he's also a neurologist and he practiced even up to his 70s, 80s. I found so many other people like that. Obviously, we know Michael Burry, who did the shots for big shots, shorted the market and made over 2 billion or thereabout, $2 billion. I don't know how much he's practicing, but at the end of the day, I think most people have to make the choice and decide. But one big thing you mentioned is that sort of when I see a medical doctor, I'm thinking this is not just a random person on the internet. Especially if we've got investors that are doctors, a lot of doctors who come to us on moneywise.doctor.com. They keep asking us, do you have a fund? Want to make an investment? I'll say, no, 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 no. We don't have a fund. And then the next question is always, yeah, do you know that guy, Mayo the builder? Is he for real? Can I invest with him? Is he a scam or not? I'm like, well, this guy's been around for a while. You've seen what he's doing out there. Obviously, you do your own due diligence. But I've never had anyone come back and say, I gave my money to Mayo. He said he was going to give me. You give a very crazy return on
Yes.
investment.
So
It's not crazy, but it's high compared to the market. Tell
yes.
us a bit about that.
So basically, so we give our investors 15%. Now,
Wow,
you would say that
15%.
you would say that
Sorry. Let's not rush that because that's significant. If up to a few years ago, if you bought bonds in the UK government, you're going to get like 1% at some point or 0.1%. And currently it's hovering between 5 and 6%. Are you saying that if as an investor someone comes to you and says, here is £20,000 or here is £100,000, every single year they're going to get 15% on their money and then get their capital at some point. Is that what you're saying? Did I hear that correctly?
very correct, 15%. Now,
Wow,
this
fifteen
is the way
percent.
this is
Okay.
the way I looked at it. We try to create a system that
Hmm.
that you are the business person. When
Yes.
what sort of profit would you expect to get if you did the business? And we've done the math over
Hmm.
and over. And that figure
Hmm.
lies somewhere between 10 and 20%, irrespective of the
Hmm.
business. And then we said, fine, let us be your handlers. Let us take anything extra above 15%. And so we guarantee the 15%. The idea is
Yes.
that we're able to do business at large scale, okay, and make a system that works. Now, again, because I'm on social media, I need to be careful with throwing out numbers there.
Yeah. With words. Yeah.
So let's give a random example, right? If I bought a house for £200,000 and I spent another £100,000 there, so I've spent £300,000,
Hmm.
right? If I make £60,000 profit, so bought 200, spent 100, and
For reform.
and yes, and I sell for 360, I've made
Okay.
£360,000.
Okay.
Right? Good. Now, for £300,000, now if I work out 15% of that, 15% of that is that's about £45,000.
45K. Yes.
Now, the way I look at it, if I actually facilitated that deal and everybody else put money together to achieve that £300,000, now sharing £45,000 among everybody and I keeping £15,000 is what the deal. So everybody
Oh,
goes
okay.
home happy.
Wow. Wow.
That,
That's a big way to think about it.
that's a simple way I've thought about it. Because my
Hmm.
direct alternative is to go into direct joint ventures.
Mm-hmm.
The problem with that is that you then have too many cooks or too many chefs cooking the
In
food
the kitchen.
in the kitchen, and the minute you do that, one is you lose control. When I say lose
Okay.
control, is that it's just too much input. Let's paint white, let's paint blue, let's paint green,
Yeah.
let's paint gray. Oh no, no, no. You know what? Let's schedule another meeting to discuss what color we're going to paint. When it in reality doesn't have real effect and output. So anyway, so the way we've structured it is make everybody happy. And in making everybody happy, we're making money.
Hmm. Okay. That is fantastic.
That's a simple way we've tried to structure it. I say to people,
Wow.
in fact, sometimes I say to people, please, if you know where you get more than what we're offering you, please tell us so that we too will stop doing the business and go with you.
Well. That sounds very interesting. Obviously, if someone were to come to say, because we're looking at risk as well, if someone were to come and say to you, Dr. Mayo, I've got this special cryptocurrency. You're going, no, let's not even go crypto. I've got this special hot stock tip. If you buy this penny stock, we've been around the block. We've been in the stock market for years. So if you buy this penny stock, it's going to double overnight. So why should I be going for 15%
Well,
when I
again,
can get 100%?
I have this conversation and I'm usually very down to it on it. I say to people, listen, the first thing, buy a house. I say to everybody,
One,
I don't even
buy your own house.
I don't mix my words on it.
Yeah.
Once you're done buying a house, if you have money, buy another house.
Oh, right. So you've got two at least,
Yeah, if you have the money and the
if you
wherewithal,
can.
buy
Yeah.
another house.
Okay.
Then
Two.
at this point now you're beginning to diversify. Go
Okay.
into index funds. Diversify your
Okay.
risk, right?
Uh,
Depending on
yeah.
how far you want to expose yourself.
Yes.
I don't mix my words on it.
Yeah.
And then, if you want to work with us, of course, you then have, an extra safe, so when we're not
Yes.
saying
So
don't
you've
do,
got some foundation. You're not
yes,
just sort of like
yes,
borrowing money and just
yes,
investing
yes,
or.
yes. So yes, by all means, if you have some an inclination that something's going to do times 50 or times 20, of course, go for it. But again, diversify your risk. That's what we're saying.
Yeah, I think I'm a very big fan of risk management diversification because I say I've been in the stock market for almost 20 years and we've been fortunate not to have any losing year. But with each year that we don't lose money, I start getting worried we're going to lose the next year. So what did I do when I had my little one, or just before he was born, a few years before he was even conceived, we set up an account for him. I said this is for investment. But I'm not going to use my wife is a bit risk averse. I don't know what your wife is like, but obviously, my wife is a bit risk averse. So we're saying, oh, we're not going to use it to go and start, investing in stocks, this and that. And part of what we did was to look at real estate property, a property to just sort of like buy and say, oh, this is towards that direction. And obviously, other things we'll be looking at will be index fund and the rest of it. But I like that risk management approach because a lot of time people are thinking too much about the return without thinking about the downside, protecting against the downside. I like your approach of thinking, well, we're able to give you 15%, which again, 15% is really high. But if you feel that you're able to double your money, make sure that you've already protected your downside and don't invest more than you can even afford to, more than you can afford to lose. Right, okay. That is amazing. Just a few things I'm going to ask in terms of future plannings, do you have any projects you're working on
Well,
at the moment?
my big site is going to take a bit of my time this year, a good part of
Mm,
next year, and
mm,
I'm really, what's the word, cautious to overexpose ourselves. So at the moment,
yeah.
I don't think I'm going to open up any new sites until we have significantly progress on the 20. I mean, the 20 house site is again is it's a lot to manage at every point in time.
It is. It is a lot. That is a lot for. I mean, even with your experience, you've got several years of experience, but being the person who's sort of like you're managing several things. You're managing the financing,
Yeah, finance. So you're managing people and money, right? Which they're
people
both
and money.
easy to do. So, and then of course, my big sites are costing us a lot of money. We have a
Yeah.
cost of about £4 million, of
Mm.
which maybe I'll get 2 million in
Mm.
in equity in debt.
In upside value.
Yeah.
Okay.
So
Okay.
it's costing us a lot of money really to actually execute. So and I don't want. I need to keep tabs on my blood pressure.
You look like a young, healthy man. So you're a young, healthy man. But basically, I understand what you're saying. You want to, as much as you're a big, bold, you're a risk taker, but you're also protecting the downsides. You don't want to over stretch yourself. But then again, let's go back to the funding. I think what you described to me, the structure, is a bit like when we invest in startups. There's usually somebody that is the general partner. So that's a bit like you. This
Yeah,
is the person who knows what's going on. This is the person deploying the funds. Maybe this is the person who does their due diligence and then buys the deal. And then there's what we call an LP, limited partner, who's actually sort of like gives you money, but they don't actually have the say and they are not interested. They don't care. And it's very similar. What you're doing is similar to like the Buffett partnership. So I'm a big admirer of Warren Buffett. I'm going to be in his investors conference in May next year in Omaha. And what you're doing is basically you're saying, if I don't make you any money, then I don't eat. If I make money on your money, because this was Buffett's structure, if I make up to 15%, which is the agreed rate, and which is far generous, is much better than what you're going to make on the baseline investment. We use bonds, US,
but
treasury and bonds or UK treasury, depending on where you are, as a minimum. Like if I give money to the government, I'm very sure that the government is likely to pay me back. Not every government. I mean, there are some governments, I'm not going to mention some countries here, but there are some governments that you're not going to be sure you're going to get your money back because they default. Yeah, but now you're saying, look, I'm going to give you above what you can get if you invest with the UK government, 10% above, which is quite high. I think that should be about 1,000 basis points. So you're going to give 10% above. But then you're also saying, now, if I exceed that 15%, which again, I think is amazing if you exceed it, whatever surplus that comes from it should come to us naturally
correct.
for carry. There's something we call it for managing the whole business and everything.
Yes.
But then is that enough for your financing? Do you need to get banks? Do you need to get other sort of financial bodies
We
to
still
help?
we still need the bank. So my site lending is we need about 2 million from the banks. We still need lots
Right,
of
okay.
banks, and then but we need to buffer it up with smaller
Right.
amounts of money. Yes.
Yeah, so you should be able to maybe say to the bank, okay, this is what we've got. We've
Yes.
got this, and this is
Yeah,
yeah,
yeah. Now,
yeah.
the other thing I was gonna say really is that we're playing the long term game here. So
Mm,
while it may appear that we may not be making ton loads of money, remember you
mm,
can't your experience you can't get it very easily. You have to time it will come in time.
yeah.
We're building our trades accounts. We are building our trades credibility. We're building our street credibility. We're building credibility with lenders, with landowners, with house owners. A lot of things we know today was because of some deals we did that we didn't make a massive, profit, say 5, 7 years.
Absolutely.
So yeah, so there
Yeah.
is a lot of benefit that comes with everything we do. People know me and say, "Oh, it's a pleasure meeting you." Like, well, actually, it's the process. It's the giving, making sure that people that work with you are protected and they make money. So I say to people now, the principle is simple. A rich man's best friend is the person that makes money for him. Simple.
I think we're going to take that quote and put it out there. A rich man's best friend is the person that makes money from him. But for you, I know because we've talked in the past, I know for you is much more than just money. You've got like you want to make sure that you're making the money with integrity, values, and all that. A rich man's best friend is the person that makes money for him. But I know for you is much more than money because you've got like you've mentioned to me things about values, making sure that you said the same way you're going to make £10, the same way you're going to make £10 billion.
Yeah,
It's
so
I mean,
the principle of money is simple. Somebody who is trustworthy with a little more will be allocated to them to manage. Hardly would you find people who manage big funds today who have defaulted with little funds. It's a simple principle, and I keep saying it. I've done business, like I said, for years and years and years. If you default, if you what's the word? If you're not prudent or you're not
yes,
integrous with little money, It's difficult,
Yeah.
and it's difficult to just keep growing. The things we do today was because we kept to what we said we would do, 5 7 years ago, and so that's just how it works. I say to people, now this, with social media and the internet, the world is a small global village, so information travels very fast. If I could send one email and copy 1,000 people and everybody at once at the same time. So there's information out there based on everything that we're doing. I said to people, my house address is everywhere. My phone number is I'm rich.
Mm, mm,
If my family is public. This is the
mm,
thing that we said that I put our hands to do. If you have any
mm.
questions, I said to people, send me a message, and we're more than happy to have a chat.
That's amazing. To be honest, that's really, really very courageous, high integrity sort of way to go about it. Because you have people say, "Oh yeah, I'm on the internet. I live on the internet." But when it comes down to money, sometimes people don't necessarily need to come and visit you. Look, you don't need to go and visit Dr. Mayo or anything, but you're verifiable. You're there on the GMC register, your license to practice, your company address is there. People see that. I think it gives a lot of
I say
confidence.
to people that the England is actually small. It's not like Canada. So if you travel
Yeah.
6 hours, you can go from one end of the country to the other end of the country, right? So if somebody wants
Yes.
to work with us, for £10,000, if you worked hard for it, I don't think 6 hours is even too far for anybody to drive. So everything we're saying is not just words, it's not on pictures, they are physical. So you can basically see them, you can go into them. I say to people, verify. So
Yeah.
not it's not oh there's a coin somewhere or there's a token on my soft on my soft no no
On my key.
on my no, there's not
You don't want to do that.
there's no token anywhere. It's a physical we're doing physical structures.
Your key is a physical key to
Physical,
get into the house.
yeah.
Right, okay. Now, a few tips. I know we've talked for about 47 minutes now. I've got a few more minutes to round up. I know you're a really, really busy man, and I can't wait to get this video up. Because we have a lot of people asking, "Oh, Dr. Maya." I'm going to say to them, go and look at Dr. Maya's video. Yeah. So, what tips, real estate for medics. If someone were to want to invest in property, maybe they might not want to go as big as you've gone. They might not want to be building 20 properties. But let's just say someone who wants to invest in property, they want to start, they're starting today, 2023, and they're thinking, with the current interest rates, everything is so high. It's part of reduce the number of property gurus because there were all these property gurus who were there when the interest rate was lower. But if someone were today saying, how can I get into property? What do I need to do? Where do I start? What tips will you offer?
So remember my principle of talents. So if you have one
Yes.
talent in property, all right, and then you have five in say being a cardiothoracic surgeon,
Mm,
do not try to reproduce your property talent at five. And I'm just
mm, mm,
figuratively trying to do that. Because if
mm,
where you have five is already in your cardiothoracic surgery, just do just do operate at your five level of five in cardiothoracic surgery. And
mm,
from a property perspective, again, if you have the knowledge and talent and gift to operate at three or five or whatever, operate at that level. So I'm going to just go back to
mm,
one, as you mean you are that person where you can't be bothered, you're just here, all you want is something safe and easy. First things
mm.
first, buy your house. There's been
Okay.
that conversation has gone on a few times, and that your house brings a whole lot more than just whatever money that comes out of it. All right. So what
Mm-hmm,
I
mm-hmm,
encourage people is imagine if you are operating at 100% financially, but your tank
mm-hmm,
mentally was zero. All right. So I say to people, try and sort that part of you, whether it's emotional, it's social, it's mental, whatever it is, get that sorted out. Okay. Have a place. If you have a family, what you and have that small safety net you do. After which then you can then begin to do small houses. Now, again, keep it simple. I say to people, just go for a simple buy to let. If you are at that level, if you want more, of course we can operate at more, but keep it simple. Just keep. I mean, my target is this: £100,000 house. If you can save £25,000, Find a small city where there is a university and just buy a small £100,000 house. Follow the process. If it takes you 3 months to save, so be it. If it takes you 1 year, so be it. If it takes you 2 years, so be it. Have the goal, have the target, £100,000 house, university city, £25,000 deposit, and just replicate the process as often as you can. No stress, slow and easy.
Right. So start somewhere, start small, start in a simple way, but also focus on your unique talents. I like how you keep coming back to this 5-3-1. Focus on where you're just like me. I'm not like a dancer, TikTok dancer, or doing stuff on
Exactly. So it's
TikTok.
like you trying
Yeah.
to operate at a level of five on TikTok, you know?
Exactly. Meanwhile, I can write copy and copywriter, blogger, and all that stuff. And don't forget, so I can't just jump out there and start trying to be funny and trying to do stuff.
Absolutely.
Maybe the same thing you're saying, focus on your unique talents. You don't really have to reproduce what everyone is doing.
Yeah.
That is amazing. Now, just before we round up, before we get to the point where you tell us how to find you, can you give us three major pitfalls or mistakes you've seen doctors, healthcare professionals, or anyone really investing in property, especially in the UK, because I know that's where you specialize?
Uh,
What are the commonest mistakes you've seen?
Um, Let me think what common mistakes I've seen people do. I'm trying to. I can't really think of common mistakes because how do I put it? Every mistake or apparent mistake is a learning curve in property.
Mm-hmm, mm-hmm, mm-hmm,
So it's not
mm-hmm.
an absolute, what it's not like it's not. So I'm trying to think of a. I'm trying to think. If it's difficult, right? If you buy something that needed more work, that's not a mistake. If you buy, if
I'll
you,
rephrase the question, Dr. Mayo.
yes,
Now, tell us the three biggest mistakes you've made, or I mean, obviously you learned from them, or three things you wish if you had to go back you'd do differently. I think I know one already
well,
that you
I'll
mentioned.
tell you a few. I tried to manage tenants myself. That didn't go well.
Okay,
Um,
all right.
so yeah, I would encourage people again. If it's not what you gain is far, or what you gain is not is compared to the hassle and stress. So I wouldn't do that again. Never.
Mm,
I would not manage tenants
all
myself.
right.
I don't want to do that.
Do not try to manage tenants.
So
Okay.
that's one easy one. Um,
I'm taking notes myself. One of my tenants is moving out today. I'm thinking I should need an estate agent. So one, do not manage tenants yourself.
I still manage some, but again, it's not something because I think because I do HMOs and I do more creative things, I just don't even want to do
Yeah.
that. So
Yeah.
that's one. What's other common mistakes? Buying in the auction. I think for people out there, it's if you're early in your journey, avoid it.
Avoid auctions if you're early. You've
Yeah,
got to know what you're
yeah,
doing
yeah,
because you don't get to see the property,
yeah,
right?
yeah. It's too tricky. It's too tricky. Without going into further details, there, there's so much that can go wrong. So much that can go wrong
Mm,
in selling. So
mm.
every house that is sold in the auction is sold in the auction because it couldn't or it cannot sell or they want a very quick
So,
sale. So if you cannot figure out that why and you cannot then mitigate why, you're just going
mm.
straight into the express.
Wow. Wow. Wow.
And everything about the auction is speed. You need to buy now, you need to exchange now, you need to complete now, or they just hand over the property to you, the risk responsibility. So what I say to people early in the journey, avoid it, just avoid it. The
Right.
We need, yes. Now I can do it. I can do it, but in my early days I would say completely avoid it. The third thing, personally, I did a lot of joint ventures in my early days, which were very
Mm,
essential to my growth. Um,
mm.
but now, with the level of experience I have, I'll do less of it.
Yes.
Or actually,
You have more.
I'm doing less of it now because
Yeah.
again, it's not easy if two people don't have the same vision, the same goals.
Nah.
I'm happy to
Mm,
walk away from a deal, not make money, but learning to get other benefits from it. But the third party may say no if we don't make money. So it's you need to be careful. So I think these are three things. So careful about auctions, careful about joint ventures, and I think
managing tenants.
yes,
Wow. Three big ones. Managing tenants, auctions, joint ventures. I'm sure everybody has to learn, make their own mistakes. You've made your own mistakes, which actually adds to your multi-million pound portfolio. Right, okay. Yeah, before we go, how can we find you? Because I'm sure many people will be asking, can we invest? Do you still have opportunity for people to invest in your deals, or is it too late?
Yeah, no, so yeah, so I mean, I give my numbers, and my number is very public, and I'll just
Oh, okay.
so my number is 0745
Okay.
106
Okay.
979. I'll put it again.
Excellent.
Zero
We'll
seven,
post it.
yeah,
We'll post it in the show notes.
yeah.
Yeah.
07459106 979. I think that's the easiest way to contact me. I'm on Facebook as Mayo Tosin. I'm on Instagram. People can send me an email. But I'm a pub. I mean, I make myself as public as possible. People see me, approach me, ask me questions everywhere, anytime. As much as I have time, I'll stop and I'll answer them.
Wow, that's amazing. Have you got like any parting words or things you'd
Right.
like to
So the
share with
people.
our viewers?
Well, again, life is in stages and phases.
Mm-hmm.
Operate at the level of the gifts that you have. Um, Whatever you do, buy property.
Wow, thank you so much for so many nuggets. I think it's going to take a bit of time to unpack these nuggets little by little. My suggestion would be if you're watching it, watch it first, digest it, come back again. When you've got clearer mind, come and watch it again. Vision from doctor to property mogul, challenges experience, so many things shared here. Thank you so much, Dr. Mayo, for joining us. Again, I think we're just going to end from here now. It's Moneywise Doctor podcast. We come here to share obviously how doctors can be more efficient in managing their money, investment, insurance, mortgages, different things. Once it's about money, you're talking about doctors, nurses, healthcare professionals. We're happy to hear it. Go over to the website of moneywisedoctor.com and subscribe for free to the newsletter. If you're new to property and you want to get a free book on how to go from renting to buying, you get one on the homepage. Click it, download it for free, and we'll be glad to see you next time when we come back again next week to have another chat on moneywisedoctor.com. Thank you.
Thank
Bye
you.
bye.
Bye.